Know the difference with Annex Wealth Management. Deanne Phillips, Director of Client Learning Development, CFP, CDFA, and ABF Professional at Annex Wealth Management. Welcome back.
Thank you. Thank you for having me.
So we've all heard the phrase, trust your gut, and it works for me more times than not, but it can also be an emotional bias that we need to watch out for, especially when it comes to your investment and retirement plan. Deanne Phillips knows a lot about this. She's an ABF. What is that again, real quick?
Accredited Behavioral Finance Professional.
Great. Let's talk about the ways we can get tripped up. The first emotional bias we need to watch out for is loss aversion. That makes sense.
It does. So this generally means a dollar found is great, but a dollar lost is more impactful to us as people. So when we apply this to our finances as a whole, and in particular to investments, loss aversion can look like someone saying, well, the markets are down and I rode this mutual fund all the way down. Now I have to wait till it comes all the way back before I sell it because I don't want to lose anything in it. Now, the challenge here is in making sure it's actually the right holding for you from a holistic point of view. Not only if it's a good fund, obviously, and well managed and can make it back up, but also mutual fund math's a little wonky. It takes double to get back up to where you were before. And if it's not something you would buy or hold right now, why would you wait? So this is something we tell ourselves because of loss aversion. We feel we have to wait for recovery instead of getting into the assets that are best for us now to help us meet our goals.
Next bias is overconfidence. That would be easy when things are good.
Right. So this can lead us to becoming too confident in our own general ability or the information that we've been able to publicly obtain, and thus in our ability to act in our own best interest. But we already know that we tend to, being people, want to move toward what the herd's doing or with momentum. Just like any profession, financial planning is a practice that requires discipline, knowledge, experience. This is where certified financial planner practitioners can actually assist with holistic planning. And every plan is different. And certainly it's simpler to make money when everything's moving up, right? You just kind of throw a dart at the board and hey, the high tide takes up everything. But it's different in a bear market, in a stock picker's market. That's when especially knowledge and expertise come into play.
How about self-control bias? Can you explain that one?
Yeah. So again, we're people, which means that we tend to seek instant gratification. I know I do. I'm having a bad day. I want that cookie, right? So in finance, this could look like instant gratification or feeling better in the moment as opposed to waiting for that longer term reward. This can derail a financial plan. And financial plans, they're made up of both long-term and short-term goals. So we have to be aware of not just doing instant buys or sells or knee-jerk reactions that might derail our long-term prospects.
We're with Deanne Phillips, emotional biases that can create issues with investment and retirement planning. Here's one. Don't want to surprise you with this. Status quo bias.
So, I just want to say here, Danny, with all of these biases, and in particular this one, sometimes the reason why you hire a wealth manager is to help save us from our own behaviors.
Right.
So this particular bias, status quo, can look like paralysis by analysis, right? It's the fear of making the wrong decision. So then we make no decision at all. Status quo. And we might think, gee, if I stay the same, well, of course, I'll get the same result. And is that result working? So this bias can keep people from exploring options that may help them get closer to their goals.
Here's a new one. Regret aversion bias. Is that a cousin of loss aversion?
It really is. So again, sometimes we seek out the information that confirms what we believe. And we're so afraid of making the wrong decision and being regretful again that it can lead to inaction. So someone being so afraid of doing the wrong thing, they actually end up doing nothing that moves them closer to their goals.
And our final emotional bias to be on guard for is affinity bias. That's what, the home team or stuff you love?
Yeah. Think back, a company stock held in a 401k, for example. People think, hey, I work for this great firm. They're publicly traded. I'm going to buy their stock and show my loyalty, right? My affinity to this company. This can also show itself like, hey, I shop at this current retailer. Why wouldn't I own the stock? But these are all very different things. And this is where a wealth manager can look and say, all right, that company stock in your 401k, would you buy it now? Not would you hold it? Because our affinity will say, well, of course I'll hold it. I've been working for the firm, right? But we have to look at what does it do to the risk within the portfolio? And just because we like a company or shop somewhere doesn't mean it's a good buy or a good hold right now. The same thing can be said for not playing our political views too. We need to look a little bit broader than that, beyond what we think, and watch for trends and, more important, valuation in the market.
Going to guess the takeaway is, and you kind of touched on it earlier, is get somebody on your side that can guard you from these things.
Right. We all have these innate biases. The first step is acknowledging we have them and understanding which ones really kind of drive us so that we can have an honest conversation with our financial planner.
For investment and retirement planning, tax planning, and estate planning, we do it as a fee-only fiduciary. We want you to know the difference. Website, annexwealth.com. Click that Get Started button. Start that wealth metric process. Deanne Phillips, Director of Client Learning Development, CFP, CDFA, and at ABF. Thanks for joining us.
Thanks for having me.